Hello traders and welcome to another video review. Today is Monday, February 20th, 2023. Let's find out what's going on the Forex calendar today. As you can see, for Monday we got the German PPI data scheduled for release and the German Buba Balz speech at 6 p.m. So there is almost nothing in the calendar between 8 a.m. and 6 p.m. in the form of the interesting news releases on Monday. On 8:30 p.m. we got Bank of England Deputy Governor Woods to give a speech, and then later on there are some data from New Zealand in the form of the producer price index input for the fourth quarter. The previous reading was 0.8%. Now the forecast is 2.4%. So this news is scheduled for release quarter to 11 p.m. So not too many of the important data scheduled for release. Let's find out then what is going on the majors. Our technical part, we are going to start with the euro-dollar review, and what do we have here is very common. We got this recent development to the downside, and it ended with this very nice hammer candlesticks. So let's just put our horizontal line on the lows of this line, on this candlestick pattern 1.0313. It was the level. Since then we got, of course, the confirmation, we got another extension to the downside, a little bit of the consolidation, and now we are approaching the level of the 1.0722, which is the 50 periods moving average. If we break above this level, there is another very important technical resistance. This technical resistance is located at the level of 1.0804, and this is just above the 100 periods moving average. So there's a very interesting space here between those two levels, because it looks like this is the zone when the technical resistance might be very strong. There is, of course, the supply zone between 1.0795, 1.0804, and there is 100 periods moving average. So this situation looks very comfortable for bears, because they can always push the market back down towards the lower levels. Momentum is testing the level of 50, and as you can see, it's just below the last week technical resistance 1.0723, and just below the 50 periods moving average. So if we want to break strongly to the upside on the momentum indicator, we should expect some sort of the downside continuation, because the momentum is not that strong to perform any kind of a rally just yet. So steady beginning of the new trading week on the euro dollar. I'm taking my screenshot, and we are going to the British pound. For our chart of the British pound, looks quite similar than the euro dollar, because what we have here is, of course, another very interesting formation. This is the formation of bullish engulfing. We got kind of a hammerish pattern here for our chart. Bullish engulfing, extension, and confirmation and extension to the upside. And the same situation is here. Please take a look at the momentum. 50 level is being tested right now. It didn't actually work, and the breakout didn't actually work yet. We are struggling to break above the local technical resistance 1.2073, which is just below the 50 periods moving average, which is 1.2106, and of course 100 periods moving average 1.2186. So without breakout above this moving averages and above the technical resistance, we cannot say that this is a bullish development. This is only 50 points on the momentum. So if there is no dynamic rebound to the upside, the British pound might continue lower, and the last week low located at 1.1914 might be revisited for a test yet again on the British pound. So this is the situation on the 4-hour chart on the British pound. I'm taking my screenshot, and let's take a look at the US dollar to the Japanese yen. What is going on here? As you can see, the 4-hour chart is showing us clearly that we are moving higher and higher because the momentum is rising as well. Nevertheless, since we've made this kind of a bearish engulfing pattern just above the level of 135, we cannot actually say that the bears are weak. We got this technical resistance because this is the swing high, so it's 135.11, and right now, as you can see, the market is making some sort of the pullback. And where is the level of the technical support? Around 1.3365. So between these zones, there might be some kind of a continuation to the upside, but the market, the RSI of the 4-hour chart on US dollar to Japanese yen just moved below the level of 60. Right now, the local low is 55, so we are very, very close to the neutral level. So I guess the breakout below 1.3365 will be the trigger for another movement to the downside. Nevertheless, please notice that the movement to the downside might be on a pullback, might be only temporary, because we are still trading above 50 and 100 periods moving average, and as you can see, both of them were providing dynamic support for bulls. So it's not that easy to just break below this level without any consequences. Of course, if the momentum drops below the level of 50, the chances for the market to touch the level of 50 periods moving average located at 132.94 is high. And even the extension towards 151.75, where the dynamic support is being provided by 100 periods moving average, is high as well. Nevertheless, as you can see, from the bigger point of view, we are still trending higher. We are still moving inside of a very, very smart channel. Let me just point out this parallel channel for you, from this very nice low towards this small dip here. And if we just let me get rid of the magnet, and if we just extend this channel higher towards the level of, let me just move it up for you guys, towards the level of somewhere here with this high, we can see that we are moving inside of this channel. Just a recent undertouch of underburst of the upper channel line. So this looks like a corrective channel. Nevertheless, it is a very, very smart channel, working as a charm. First touch, second touch, third touch, then above the other half. Yeah, so we are trending now in the upper half, maybe not other half, but the upper half, right? So it's a very smart channel. We are keep trading in it. So please keep an eye on the US dollar to the Japanese yen 4-hour chart. What else do we have? Is the US dollar to the Swiss franc. The situation on the Swiss franc is kind of a steady, because we keep trading since the beginning of the year in this very narrow zone, up and down, up and down. There is not much going on here, to be honest. 9,359 was the recent high from the US dollar to the Swiss franc. Then we've done some sort of the very nice rally towards 9,331, and then bearish engulfing, confirmation, extension, and now we are trending lower towards the standard moving average. So the simple moving average, which is of course 50 and 100 periods. The market is trying to bounce from this level. Why? Because we hit the 50 points on the RSI from the extremely overbought market conditions, which is why I'm saying that this market is moving from the overbought to the oversold, from the overbought to the oversold, from the oversold to the overbought, and so on and so on. Nothing changes for the last 2 months. We got our steady zone that markets likes to trade. No such of kind of no surprises here. Dark cloud cover, the bearish dark cloud cover pattern here when we broke above the 9,300 pips, and then of course we got the extension to the downside. So the outlook remains slightly bearish here on the US dollar to the Swiss franc. However, please notice the fact that we might have some sort of the reaction on the trending, on the moving averages as well. So last but not least, let's take a look at Bitcoin. What is Bitcoin doing? And As you can see on the 4-hour chart, we got plenty of some sort of the patterns, candlestick patterns that are going to be showing us that we have engulfing patterns and tweezer tops. So very interesting situation here on the Bitcoin. Nevertheless, we've made the recent rally towards the level of 25,227. Nothing changes here because we still need at least $250 in order to break above the very important technical resistance. We managed to bounce from the level of 23,350. Which was the low on the 17th of the February. And then, of course, after some period of the consolidation, there was another attempt to rally. Nevertheless, look at this big pin bar, big upper shadow, which is, of course, the engulfing pattern again. And after the twisted top was done, we are trending lower. Nevertheless, on the 4-hour chart, we got another bullish cross, 50 crossing 100 periods moving average. So the recent rally here on the Bitcoin, let me just take a look at the price range. The recent rally here towards the top was 18%, so that's not bad. That's not bad at all. So we got this kind of a, let's say, pullback or correction, and now the market is again ready to make another bullish movement to the upside. We've went lower from the extremely overbought market conditions, but we are still above the level of 50. Bulls are in control the situation here, and as long as the level of 23,350 holds and the market doesn't trade below the 50 and 100 periods moving average, the short-term outlook for Bitcoin remains bullish. And that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye-bye.